In the ever-volatile, ever-unpredictable world of cryptocurrency, where billions of dollars can vanish or appear in a matter of hours and fortunes are made and lost on the flip of a candlestick, one signal has always separated casual traders from the true market insiders: volume, the lifeblood of every asset, the oxygen that fuels price movement. And in the case of XRP, the last 24 hours have lit up the market like a flare in the night, a deafening alarm for those who know how to listen, because the trading volume has erupted to a staggering $4.2 billion in just a single day, a figure so massive, so unignorable, that it has pulled the gaze of analysts, whales, and retail hopefuls alike, sparking questions about what, or perhaps more importantly, who, is behind this sudden surge, and whether it marks the opening move of a seismic shift in XRP's price trajectory or just a well-timed head fake. In a market addicted to volatility, because history has taught us that when XRP volume jumps this aggressively, the story almost always runs deeper than meets the eye, and the blockchain, that immutable, unforgiving ledger, tells us everything if we know where to look, because in those same hours, on-chain tracking tools lit up with whale activity, massive wallets shifting XRP in quantities that make everyday trades look like pocket change. Hundreds of millions moving from deep cold storage into exchange wallets. A maneuver often signaling one of two things: preparation to sell into strength, or the more cunning, more calculated play, setting up liquidity to absorb massive buys without causing slippage. And blockchain forensic analysts watching these flows have already pointed to several clusters of transactions that align almost perfectly with past whale accumulation phases. Phases that in 2017, 2021, and mid-2024 preceded violent upside moves that caught retail traders flat-footed and gasping for entry points as the price rocketed away from them. And the eerie part is just how similar the rhythm feels now, with short bursts of heavy inflows followed by quiet accumulation, as if someone, or more accurately several someones, are choreographing a slow tightening of supply before an announcement or event forces demand to spike. But here's where it gets truly intriguing. These movements are not isolated. They are being mirrored across several exchanges simultaneously, including Binance, Kraken, and even regional giants like Upbit, where just last week a whale shifted 58.6 million XRP in a single transfer, sparking speculation. That's South Korean traders, notorious for catching bullish waves early, might be positioning ahead of the West, and the numbers only grow more suspicious when we consider the broader August 2025 landscape. Because mere days before this volume surge, Ripple's acquisition of stablecoin payment platform Rail for $200 million was announced, a move that positions Ripple to potentially integrate XRP with a stablecoin settlement layer, instantly multiplying its use cases in cross-border and institutional payment corridors. And if whales have even the faintest whiff of insider confidence about how this will impact XRP liquidity, their early accumulation makes perfect, ruthless sense, because the market rarely rewards the latecomers, and all this is playing out against a backdrop of shifting macroeconomic winds. With U.S. interest rate cuts on the horizon, risk assets from tech stocks to crypto have been buoyant, but in crypto, liquidity flows like water toward the path of least resistance. And right now, XRP's combination of legal clarity post-SEC litigation, increasing institutional adoption, and growing cross-border demand makes it a magnet for capital looking to front-run the next big narrative. And while some will dismiss this $4.2 billion as just a blip, the more disciplined observers are connecting dots between derivatives markets, where open interest in XRP futures has exploded by over 200% to $12.4 billion, signaling that speculative and institutional bets alike are being placed with unusual aggression. And the last time we saw futures volume jump like this in tandem with spot volume and whale inflows was the run-up to the $3 all-time highs in early 2018, when a perfect storm of retail FOMO, institutional positioning, and favorable headlines sent XRP into a parabolic frenzy. And even now, technical analysts are whispering about the formation of a bullish flag pattern on the higher time frames, one that could theoretically project price targets into the $4.50 to $8 range if confirmed. Though veterans know that patterns alone are nothing without volume to validate them. And right now, Volume is screaming, not whispering. And yet the question gnaws at the edge of every trader's mind. Is this the ignition or the trap? Because whales are not philanthropists. They are apex predators of the market, and for every rally they ride, there are retail holders left holding the bag after a meticulously timed distribution. So to answer that, we dive deeper into the on-chain breadcrumbs, and what emerges is a pattern of coordinated withdrawals from exchanges into unidentified private wallets following brief sell-offs, a hallmark of strategic accumulation. And in plain terms, it looks like certain large holders are shaking the tree to trigger weak hands into selling, scooping up their coins, and then stepping back just enough to let the price recover, priming the chart for the next leg upward, a move designed to test resistance, retreat, and then breach it with overwhelming force, a tactic whales have perfected. Over years of manipulating thin order books and exploiting retail impatience, and as we sift through transaction logs, the timestamps reveal that much of this activity is concentrated during low liquidity hours in the US, but high activity windows in Asia, suggesting that the coordination is international, perhaps even cross-institutional, which dovetails with rumors that several Asian remittance giants are preparing to expand their RippleNet corridors, announcements that, if made public, could instantly justify a higher valuation for XRP based on utility alone. And this brings us to the most dangerous part of the equation, the convergence of narrative and liquidity. Because in crypto, price rallies are not just fueled by numbers, they are sustained by belief, and belief is forged in headlines, social media hysteria, and the dopamine rush of green candles stretching endlessly upward, and the whales know this better than anyone, which is why they often lay the groundwork long before the story hits the front page. And right now, that groundwork looks eerily complete, with liquidity positioned, resistance tested, and volume surging, leaving only the spark to ignite the fire. And maybe, just maybe, this $4.2 billion day is the market's way of telling us that spark has already been struck, that somewhere behind the closed doors of boardrooms, exchanges, and liquidity desks, the next chapter of XRP saga is already being written, a chapter that could see the token break free from its years of suppression and finally claim the kind of explosive move its most loyal holders have been dreaming of since the last bull run. But as always in this market, the line between fortune and ruin is razor thin, and the whales swimming beneath the surface know exactly how to make that line dance in their favor. So the only question that remains is whether you'll be watching from the shore as the tide turns, or riding the wave alongside them as XRP surges into uncharted waters.